All right. Welcome to the late night show or the late night with Sam. It's your boy Sam, and there is no one live right now. And I thought, hey, why not continue with momentum? We have a lot of content to go through. Not going to go for 2 hours like I did last night. That was a little too long. I got to get some sleep this time, and I'm actually starting a little late. It's 11:15 a.m. Sorry, p.m. here in California. 2:15 a.m. for some of you guys, and I am tired AF. It was a very long day. Amazon earnings, the market going wild today, just head fakes left and right, and hopefully a good show, guys. So again, if you can't even tell, I'm really tired right now, but I'm going to come through for you guys because I'm here for you guys. All right. So quick housekeeping. If you are here watching on Twitter, tune into the YouTube channel. I release additional content on there. So go ahead and go to the YouTube channel located in the link below on the comment right there. I'm getting used to it. I'm getting used to it, guys. But let's move on with the show. Of course, if you guys are on Twitter, that's my Twitter right there. So, Amazon. If you guys don't know, this is actually my largest position in my portfolio, and it was an amazing earnings. There's been a lot of criticism that, hey, every single mega cap is up year to date except for Amazon, right? And Amazon has basically been a laggard for a long time, and I would really kind of attribute that to because of the fact they've been decelerating cloud growth or AWS growth, which was originally a couple of quarters ago was about $110 billion run rate. And they decelerated from like 19% to 18% and then 17% after that. And it was just falling off a cliff, lagging the entire Mag 7, the entire stock market, basically flat year to date up until today, right? Or up until after hours at least. And it's up about 13% after hours. And let me actually bring up the chart right here. Yeah, so we're looking at about 13% after hours. I mean, it kind of fluctuated decent amount. So we are up about 13.19% after hours. But that's not the big deal. The big deal is that we got reaffirmation that there is a cloud comeback when it comes to Amazon. Like I said, 17% last quarter, 20.2% in AWS growth. And I would say that's like 80% of the story. Let me go ahead and bring up, let's see here. Basically a little bit of review of what we're looking at in terms of earnings. So actually, let me make this a little bit bigger for you guys. All right, so we have Amazon Q3 2025 earnings. When I posted this, they were up about 9.5%, which is no joke. 9.5% for a $2.5 trillion company. So I guess after that would be like $2.75 trillion is a big move, right? That's a $250 billion move. And when you think about the sympathy plays when it comes to Amazon, there's all of the cloud stocks out there, all the software stocks. There's a lot of the semiconductor stocks. There's like pretty much almost every single Mag 7 that's out there. The whole market moves when something as big as this goes up. I don't want to get into Apple earnings because I just don't really care about Apple, to be honest. That's probably just something you want to put in at the side. It's probably going to give you a better return than treasuries. But Amazon is a growth stock, in my opinion. It is not as safe as, let's say, a Google or I don't know. Honestly, all of the Mag 7 is pretty risky nowadays, but it's not as safe as like an Apple or a Google or even like an NVIDIA at this point. But NVIDIA, I would even say, is not necessarily like the safest thing you can think of right now in the market, but it's definitely safer than like the IRENs and NBISs and so on, which I'll get a little bit more into later. Amazon is a mega cap growth stock. The the volatility of Amazon highly depends on its growth. And it's not just the growth of the company as a whole, because e-commerce is a large segment in the business when it comes to revenue, because you could see here $180.2 billion in a single quarter. If you project that on an annual run rate, that's almost $800 billion. So like we're talking about $750 billion in revenue for a single company, which is going to be the largest revenue or run rate growing company in the entire world. Right. So right now it's Walmart. And I think probably in a couple of quarters, it's going to be Amazon. Amazon will be the largest revenue generating company in the entire world. And this is my thesis, is that Amazon is going to be the first long-standing $10 trillion company. I would think NVIDIA is probably going to get there before Amazon. But if you think of a company that will literally be a giant for a long period of time, which has like tentacles in every single business or almost every single business you could possibly think of, that is Amazon. Amazon is my largest position for a reason. Amazon is a conglomerate. It is a giant. It has tentacles in every single sector of the largest businesses of the entire world. It's e-commerce, hyperscalers, advertising, and so on. Let's go through the metrics. You could probably go through the YouTube videos that are on my channel to kind of get a little bit of a thesis. It's Amazon. I've talked about it ad nauseum for a long time, but as far as this earnings goes, it was a phenomenal earnings. Not only did they grow net income or EPS 36% year over year, but that was outpacing revenue growth of 13% year over year. So when you see earnings growth or net income or EPS growth outpace revenue, that means that they're becoming more profitable versus the year prior. That is what you want to see. That is what makes a stock go up. It's EPS growth. Usually stocks that have flat EPS growth or maybe EPS growth in the single digits, they generally have a much larger revenue, but they trade at a much cheaper multiple because they're not growing that quickly in terms of the bottom line. The bottom line or their EPS growth is what Wall Street always looks for no matter what. And even though Meta had an amazing quarter, in my opinion, Wall Street just generally sold it off because of that EPS difference. Now, will Meta be back in the 700 levels in the next couple of weeks? Who knows? We'll see. But every analyst loved that stock, so I'd imagine they'll probably come back if the market stays bullish. So for Amazon, like I said, $180 billion just last quarter alone, beat the estimates at $177.8 billion, 13% year over year growth for the entire business or the group consolidated revenue. Let's dig into the additional metrics over here. Operating income. So this is the amount of money the business generates in dollar value on the bottom line, or earnings in terms of income with operating business. So this is just the business alone, $17.4 billion. So that didn't necessarily grow year over year, but that was because of the $21.7 billion charges that they, whatever it was, usually with this stuff, it's like surface level. I don't really pay too much attention to it. It would have been a lot more. It would have been $21.7 billion. So it would have actually grown year over year. But because of these charges, it didn't necessarily grow. When you go to the bottom line, that grew 38% year over year, which is what kind of you see with the EPS. EPS kind of throws things off a little bit, but blah, 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 whatever. Operating cash flow. So this is not going to be impacted by their CapEx. If you want to look at how a company's doing minus the CapEx or SBC, you usually want to look at operating cash flow. In software companies, they usually have a lot of SBC. You subtract the SBC from the operating cash flow or you add it back, and that is the adjusted operating cash flow. In this case, Amazon is a giant. Of course, they're going to have SBC, but that isn't really a big deal with a company that's growing at this scale and very profitable. So it's not really a metric to look at. That grew at 16% year over year, and that was $130 billion. So their operating cash flow margins are actually pretty good. The cream of the crop here, AWS revenue. AWS revenue was $33 billion. That grew at $20.2 billion. I'm sorry, 20.2% year over year. That is phenomenal for this business. Like I mentioned, this is probably one of the reasons why it's up. Probably like 80% of the reason why the stock is up 13%, because the street expected 18% or 17, 18%. So flat acceleration or like no acceleration whatsoever versus last quarter, but they accelerated more than 3%. That surprised the street. And on top of that, Andy Jassy in the commentary calls pretty much said, we're going to be growing pretty fast for the next couple of years. So this is just right now, guys. This is the reason why the stock is up 13% after hours. On top of that, the operating income of AWS grew 9% year over year, not as fast as the revenue, but still they became more profitable than they did last year. So $11.4 billion in the operating income or EBIT. All right, so earnings before interest and taxes. Going into the e-commerce segment, this was actually very interesting. I'll dig a little bit more into this versus last quarter using fiscal.ai, but this actually did a lot better than I expected. So the reason why is because North America is their largest part of their e-commerce, right? In the US, that's where all the money is made because we are a consumption-based economy. But when you look at international revenue, that's the one that's actually growing much faster at 14%. And the reason why it's growing faster is because this is mostly in emerging markets. Andy Jassy has talked about this ad nauseum for the last couple of quarters. International is probably going to be an underestimated segment when it comes to e-commerce. And the reason why is because when you look at these other countries that they're trying to base themselves in and accelerate growth in, these are countries that are growing GDP at 3, 4, 5, or even 6% plus. And the reason why that's important is because this is not North American revenue. This is starting at $40 billion. So even the comps are a lot better. So this might actually accelerate next quarter. But on top of that, we're talking about penetration into a digital economy that really has not reached its pinnacle yet. Like we have a lot more to go through when we talk about international revenue. And that's the reason why I'm invested in Mercado Libre, Nubank, and so on, and Grab, especially Grab, because of the fact that they are focusing in emerging markets, totally underestimated. Totally underestimated. No one really thinks about that, but that one is going to be very important later on. Advertising revenue, another high margin business, grew at 24% year over year. I'll go over a little bit of the commentary during the earnings call, but like very bullish those numbers. So guys, this is the reason why it's up so much, because of these crazy numbers for a $2.5 trillion company. They had to re-rate it. So excuse me, as far as that goes, Q4 guide was actually pretty good. It's assuming they're going to grow 10 to 13%. Obviously, not as much as 13% year over year that they did this quarter, but they're gonna beat that, right? So we're probably looking at maybe flat or not necessarily acceleration next quarter, but we also talking about the law of large numbers. $180 billion quarter. Google had $100 billion quarter, which is amazing. Meta had less than that, and Microsoft had less than that as well. So this is much larger in terms of top line when it comes to revenue, and the fact they're going at 13% is pretty phenomenal. They're guiding for operating income around $21 to $26 billion, which I think that would put it at about 10 to 12 to 13% EBIT, which is, I believe that's actually more profitable than this quarter. So that, again, that is another reason why the stock is up. So high level, I mean, this quarter was friggin' amazing, guys. Like, very glad to be an Amazon shareholder. Been for quite some time, and I don't know if we're going to see 220s again if the market doesn't pull back. If the market pulls back, then it is what it is. It's mega cap. But if the market stays bullish, guys, I don't know if we're going to see 220s again unless they tank the next quarter, which I highly doubt. I'm going to get a little bit more into it as far as the earnings calls go. But this was an amazing quarter. So let's go over just some commentary on CNBC over here as far as how Amazon really did this quarter. And this one was talking about AWS. So I'm going to go ahead and reshare the screen, actually, because I don't think I'm sharing the audio. So 1 second. Let me reshare this screen over here. Boom, boom. Okay. You should be able to hear this one.
Estimates cloud revenue growth was up 20%. That was well above expectations and higher than last quarter's growth. Let's bring in CNBC's Mackenzie Sagalis for the details. Mac.
So, Mel, Amazon stock trades on cloud, and that business is finally back in acceleration mode, rising at its fastest pace since 2022 and beating Wall Street's expectations with $33 billion in revenue. Now, that's helping ease fears about Amazon losing big-ticket AI deals to Google and Microsoft. CEO Andy Jassy saying in the shareholder letter that AWS is seeing strong demand in both AI and core infrastructure, noting that the company has been focused on expanding compute capacity to meet that surge. The report helps offset softer retail growth, with online store revenue slowing down and ad service revenue. Amazon's high margin, fast growing business came in flat. But AWS, it's setting up Amazon for its first ever $200 billion quarter, with the company expecting nearly $210 billion in revenue in Q4. That's what they're projecting. And that call, which is underway now, they say backlog has grown to $200 billion by the end of Q3. And that doesn't include several unannounced new deals in October, which together is more than their total deal volume for all of the third quarter. That's probably why you're seeing those shares up around 13% right now, Mel.
All right, so that's kind of what I recapped earlier. There really isn't much to say as far as the commentary goes.
Mackenzie Segal was joining.
There's one more thing I'm going to go on, but I'll get into that a little bit later when I go over the earnings commentary. So I'm not going to play the earnings call, guys. I'm going to go pretty much like what I thought was very important in the earnings call. I mean, if you guys caught it, I was on Almost Market Close. We were listening to the earnings call, and we were shooting the SHIT, and I mean, when you own a stock and it's up 13%, everything sounds great, right? But these are the details about it that I thought were pretty important, and let's just like dive into this one a little bit. So, Amazon was up at that time. The earnings call started. Andy Jassy said they added 3.8 gigawatts of power in the last 12 months, and they expect to double that total capacity by 2027. So in addition to that, they're planning adding another gigawatt of capacity in the next freaking quarter. Like, I don't know, like when I hear stuff like that, it's insane how fast this company's growing. Someone is helping these people. I'll get a little bit into that later on in the content. Actually, let me take care of the timestamp here real quick so I can provide this information to all of you people. We are at, I'm going to get better at this. I promise. I'm going to get better at this. All right. So that was 22 minutes. All right, cool. So I'm going to get a little bit more into the data center aspect later on and why that impacts other companies like NBIS, IREN, CIFR, I guess CleanSpark as well. I think that's more attributed to Bitcoin movement. But you have these other companies that neoclouds as well as ex-Bitcoin miners that are pivoting. This is why it's important for those companies, right? Because Amazon is not doing this on their own, right? They are outsourcing this stuff to other people. And whether that's a private company or public company, like they don't disclose that information. We don't know. And whoever's working with Amazon, they don't disclose that information either. So we have no idea who's working with Amazon. But I think that's going to come out at some point. We just don't know. So we can speculate who it is. We can think, hey, maybe it's IREN. Hey, maybe it's NBIS. Who knows, right? It's really at these companies' mercy to be able to relay that information publicly. So I'll get a little bit more into that one later. Andy Jassy mentioned that Tranium 2 is now a multi-billion-dollar business, and that grew 150%, not year over year, but quarter over quarter. So last quarter's numbers, he doesn't give the exact figure. Let's say last quarter was $1 billion. It grew 150%. So that means the 3 months later, over that time period, it grew $1.5 billion, $2.5 billion. That's just an example. I don't know how big it is. It could be small numbers, law of large numbers. It could be a much smaller segment that reaccelerated. So if you think about NVIDIA, how they were growing at triple digits out of nowhere because their comps were easy, right? So I would not say they're going to continue growing 150% quarter over quarter, but the commentary on the call was that they're anticipating Tranium 3 to grow at a monster pace once it goes into preview later on this year, and once it basically gets released out the beginning of 2027. I'll get a little bit into that one later on. Moving on to ads. advertisements for Amazon. This is with Prime Video. This is with their demand service provider that they partnered with Roku on. This grew at 22% year over year. This was actually on the previous post that I had in there. There's actually this one right here that kind of gives it a much better visualization. You have basically advertising growing at 24% year over year, $17.7 billion. This is a very high margin business. And this is also something that I wouldn't say is underestimated, but I think the market is starting to realize how important this business is and how big it's actually going to get. Again, law of large numbers. This is going to grow very fast now, but I don't expect this to continue growing at 24% year over year. All right. So ads generated. I already went over that one. Amazon Prime. Jassy touched on this one in the call. They said that when last week when they had Prime for NBA, they got an average of 1.25 million viewers per game, which is pretty insane when you really think about it. And that was mostly in the U.S. and people in the U.S. love basketball. I love basketball. I love country football too. So I'd imagine this really is going to be. This is probably going to accelerate throughout the entire season, especially as we get into the playoff season, the championships. But that's very bullish, not just for Amazon. That's also bullish for Robinhood, and it's bullish for a lot of these sports betting services because we're all degenerate as hell, right? So, I mean, you get excited, you watch a game, you want to throw some money at it, whatever. Like, I mean, come on. I was like betting on like a football game today, just having fun, whatever. But I'd imagine this is probably going to grow, especially as prediction contracts are legalized on a federal level, right? So, I mean, come on, guys. This is just an easy win for Amazon, and it's an easy win for Robinhood, which is also the reason why I'm bullish on Robinhood as well. When the CFO came on, this was actually a very boring segment. I was not falling asleep. Again, a stock is up 13% after hours. Anything sounds great, right? So he was basically talking about AWS acceleration, but it was driven by AI demand, AWS EBIT growth is driven by efficiency, blah, 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 whatever. So far in 2025, Amazon spent $89.9 billion in CapEx. And this is mostly focused on infrastructure build out for AWS. Remember, I said 3.8 gigawatts of capacity built in the last 12 months, 1 gigawatt of capacity for the rest of the year. In 3 months, they're going to build a massive 1 gigawatt data center. Full year CapEx increased from $118 billion to $125 billion freaking dollars, guys. That's insane. That is insane how much money they're spending on infrastructure. We heard Google's increasing their infrastructure spend. We heard Meta's increasing their infrastructure spend. We heard Microsoft is increasing their infrastructure spend. Everyone is spending more money, right? It's so hard to be bearish. This entire narrative, everyone's spending money. People are like, "Oh, where are they getting the money from? Why are they doing this?" Okay, guys, we already know that's going to happen, right? But until it does, stop trying to call the top. That's my whole narrative, right? Short term, next couple of days, who the hell knows where the market's going to go? But long term, maybe I'm sorry, guys, but I'm bullish in the medium to long term. If the markets tip over, maybe that might change. But if we're trading above the 50-day, 100-day, and 200-day moving averages, I'm going to stay bullish. So, anyways, that set aside, I already mentioned the 1 gigawatt of capacity for Q4, and they're going to double the total capacity by 2027. And Tranium 3 is 40% faster. Like I mentioned, that's going to be previewed at the end of the year, and that's going to be released by 2026. Anthropic is one of the largest customers that are taking advantage of the Tranium processing unit, and that is a much higher margin business. So as Tranium begins to scale out, and I'll talk about the reason why this is important. If you guys don't know, Tranium is basically an application-specific integrated circuit. It is a GPU that is designed for specific tasks, mainly tied to AWS, right? So TPUs, Google, Avgo or Broadcom designs ASIC chips or helps design ASIC chips for Google, or mostly networking cards. All these companies basically design their own chips. MRVL is actually probably one of the lead designers behind Broadcom that designs chips for a lot of the mega caps, Meta and Microsoft and so on. And they help design Tranium 2. We don't know if they're part of the design for Tranium 3, but I'd assume that kind of looking at this chart over here of MRVL technology after hours. Yeah, they're somewhat tied with this one. This thing was up like 4% after hours. So I would say that the market assumes that they're tied with it. They haven't said they're not tied with it. Amazon hasn't said they're not tied with it. So no news is good news in this case. Moving on to the grocery segment. Have you guys ever checked out, because I know a lot of you people have Amazon Prime. Like, come on, everyone has Amazon Prime. My kids have Amazon Prime. They don't pay for it. I pay for it, right? My kids have Amazon Prime. You guys know you can deliver groceries to your door if you live in 1,000 cities in the U.S. One of the 1,000 cities in the U.S. They're actually going to expand to 2,300 cities in the next 12 months. I live in L.A., so everything's available here. I ordered Greek yogurt and kielbasa sausage to my house in like 3 hours. I was going to go to the grocery store. I was going to go to Ralph's, which is on my Kroger, ticker symbol KR. I was going to go to Ralph's and I was going to pick this SHIT up. I didn't have to. Amazon delivered it to me within a few hours. And it was convenient. Just think about that. If you live in one of these 1,000 cities, in 2,300 cities in total in the next 12 months, they're going to release it. Guys, this is ridiculous. Like, I never even knew this existed until I saw it in the app. Now, once they start to expand this, which Andy Jassy said they're going to expand on it, that is directly competitive with Kroger, which is one of the largest grocers in the entire world, or entire U.S. That's competitive with Safeway, like Heinz Ketchup said. That's competitive with basically all of these companies. Actually, yeah, no, you're right. Safeway, Kroger's, and Ralph's are all the same company. But like all those Stop and Shop, and if you live in the East Coast, you know about Stop and Shop. All those crazy places. This is directly competitive, and Walmart too. Walmart sells groceries. This is competitive. I don't know. I've never ordered groceries from Walmart. Personally, I barely even order anything from Walmart because it's just, I would rather use Amazon. I already pay for it. I don't know. Buying Walmart or Amazon stock, I'm going to buy Amazon like 20 times over. So that's what he said about that one. Someone actually asked about the commentary on the head count. You guys heard Amazon is laying off 30,000 people, corporate, warehouse, retail, whatever. And they said it was up to 30,000, but the bottom figure was 14,000. Oh, AI is going to steal people's jobs. No, AI is not going to steal your job. It's not going to get you fired. Andy Jassy debunked that. Now, who knows if it actually is? In my opinion, I don't think AI is going to put you out of work at least for another 5 or 10 years. I think we have some time for that. If we look at 2020 and 2021, everyone went on a hiring spree. We're just normalizing, guys. We're just going back to the median or the mean. Like, this isn't like, oh my God, everyone's losing their jobs. Unemployment is going to skyrocket. No, it's not going to. Even Jerome Powell said that it wasn't the case yesterday. Today's Thursday. Yesterday was Wednesday for me. I'm still in LA. Guys, don't worry about that. Andy Jassy debunked it. I'm not worried about it. But you guys better learn how to use AI, all right? You better learn how to use ChatGPT. You better learn how to use Gemini and all that stuff. If you don't, it's equivalent to not learning to use a computer back in like 2000s or 1990s, except this is at a much faster pace, right? So you could have gotten away with that using a computer for like a couple of decades. Now it's like you got like 2 or 3 years, buddy, to learn how to use AI. So I think you got, if you're watching this video, you probably already know how to use AI, so don't worry about it. Robotics. This was actually Ahmed asked Steve and I like what we're looking forward to in the earnings call, and like Jassy hit every single thing that I was looking forward to hearing about. He hit robotics, and it was actually pretty interesting because like they just made the announcement recently that they have 1 million robots deployed in warehouses, and they're going to scale that up, right? And he said that robotics is actually a part of the investment that they're doing, and obviously it's not with infrastructure and silicone, but like it is still a segue into that, and this is important, right? Because the direct application of robotics for Amazon, the use case on a physical scale is warehouse. Amazon is the robotics play. Part of it's Tesla, maybe. Part of it is probably Symbiotic. Maybe it's Walmart, because Symbiotic, one of the clients is Walmart. Actually, their largest client is Walmart. It's Amazon. The robotics play is Amazon. That is, but it's not the pure robotics play, but it's one of the bull thesis for Amazon. Amazon is a robotics play. Stop trying to look for these crazy things. Maybe you want some alpha. Like I have shares in GXO, whatever. But like the robotics play, if you want alpha without doing any research or anything, is Amazon. You want secondary, it's Mercado Libre. Mercado Libre is already in robotics too. They're going to dive into that. Like Amazon, there's a reason why Amazon Mercado Libre makes up like 35% of my portfolio. No, I'm sorry, 25% of my portfolio. Because like these are the biggest e-commerce business and fastest growing e-commerce business in the entire world. Latin America is like one of the fastest growing regions of the world besides Southeast Asia. There's a reason why I own Mercado Libre. You could check out the video that I recorded yesterday during the first episode of Late Night with Sam. I went over the Mercado Libre earnings, and it was actually pretty funny because let me go through this chart here, guys. After the earnings yesterday with Mercado Libre, and I thought it was hilarious. So the stock dropped as much as 5% after hours, right? And I didn't buy the dip. I bought the dip in the 2000s around the 200-day moving average. Yeah, I think that was the 200-day moving average. Was it the 200-day moving average? I lied. We're actually above the 200-day moving average. Okay, fine. So that was below the 200-day moving average, but psychological level 2000, whatever, blah blah blah. And they sold off 5% after hours. And I looked at the earnings. I'm like, why did this? This is stupid. Why did this sell after the earnings? It made no sense. And then, of course, lo and behold, it ends up closing the day up 3%. So they reversed the 5% down, and then they ended up closing up 3%. They're actually in the 2400 level. So maybe they were like up like 6% or 5% or something. But yeah, I mean, sometimes the market throws you these opportunities like Amazon in the two teens, and you got to swing it if the conviction's there. But anyways, robotics is an important play, guys. Like there's like 4 different bull theses for Amazon, and robotics is one of them. All right. Amazon CEO talks about utilizing agentic AI to perform. Yeah, Okay, fine. That's cool, Andy. He actually confirmed that the user experience with the app is pretty bad, and it is. It's pretty bad. Like I would expect it to be better, but Amazon's gonna improve that. So he talked about advertising, and he's saying like they're in the early stages of advertising, and especially when it comes to Prime Video and their DSP platform. I agree with that. I think it's pretty early in the game. I think Amazon is taking business from the Trade Desk. And originally, when the Trade Desk reported their earnings more than a year ago, when they slowed down their growth, and on top of that, when they contracted profitability, I thought, hey, Trade Desk or Jeff Green, the CEO, he was talking about in the earnings call, does not have a chief operating officer at the time. Maybe this is more of an operational thing with Trade Desk. I gave them the benefit of the doubt that the stock bounced, and I ended up selling into that bounce because I just didn't see it. I saw AppLovin, which is a position that was growing for me, Reddit, just growing tremendously. And like, why wasn't Trade Desk growing? Like, it made no sense. So I got sick of it, and I'm selling a position for like less than break even. Like, I held the thing for like 2 years, and I ended up not making any money off it. It's opportunity cost when it comes to a lot of this stuff. And I move pretty quickly sometimes, but it is what it is. So anyways, it's pretty clear that Amazon is taking business as far as a DSP. They're not just worried about a walled garden where they're just building an advertising system or demand side, sell side platform where they're basically selling real estate on their website for advertisements and then letting people buy real estate, blah, 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 whatever. They are letting other people use their demand service platform for their own application. So they're partnering with Roku, which is one of the largest connected TVs businesses in the US, to grow their business. Like, dude, this is like bull case number 5 million with Amazon. Like it's unimaginable how I still think Amazon is a buy today after this 13% run up. Now, if it's a long-term investment, I think it's buy. If it's a swing or a short-term trade, like I want to chase this SHIT, guys. Like I want to chase it. Anyways, that concluded the call. It was up about 13% after hours. Let's move on to the next topic. Holy cow, that was like an 18-minute segment, guys. Whew. All right, so the next thing I want to talk about is what's going on with the data center companies. I know there's a very juicy topic that a lot of you guys want to know about. So let's go over it. All right. So these companies have run up a lot. All right. NBIS is up 5 times. IREN is up like 7 times. CIFR is up like 5 times, 6 times, whatever it is. You know, there's a lot of people talking about this stuff. It's a very hot commodity right now. But I think it's justified considering that we just saw almost all of the mega caps. In fact, all of the mega caps guide up on their CapEx spend. And while none of them besides Google and Microsoft have mentioned specifically who they're working with, right? So Google is partnering with CIFR and TeraWulf. CoreWeave is partnering with Applied Digital, and I forget the other company. Actually, no, I would have said Core Scientific, but they actually denounced that merger. Anyways, Microsoft is partnering with NBIS. You guys already know about that one. IREN hasn't announced anyone yet. And the reason why this is super important is because, dude, like these companies are just building so much infrastructure very quickly, and they're not doing it on their own. They're not doing it on their own. They are hiring companies to do it for them, or at least hiring companies that can do it better than they can at a much faster pace. And that's the reason why these companies have ridden up so much in the last couple of months, because we had the earnings last July with all these mega caps basically saying like they went from Q1 where they basically contracted guidance as far as CapEx goes to Q2 basically saying, hey guys, you know what? We're going to spend so much more in CapEx, right? And that is when these things started to run. If I pull up these charts over here, like, dude, this IREN chart is like a breakneck rally. Earnings for Amazon, Google, Microsoft, woof. Okay, NBIS. Earnings for Microsoft, Google, Amazon, woof. We come to today. All right. CIFR. Earnings. CapEx goes up. Boom. Right. How come it didn't go anywhere before that? Because these mega caps contracted CapEx in the first quarter, and then they completely turned the other way around in July. And they were like, you know what, guys, we're going to spend way more money than we thought. And like I said, they are not doing this on their own. They are hiring these companies to do it for them. They are hiring private companies and public companies to do it for them. And that is the reason why you got this breakneck rally. Is this going to continue? Well, then that's $1 million question. Is this all going to continue? Are we going to retrace back to the low teens for CIFR? Are we going to retrace back to the 60s for NBIS? Are we going to retrace back to the 30s or 40s for IREN? Guys, I have no idea. I'm not like a saint or anything. I'm not like a fortune teller. I have no idea. All I know is that I've been looking at these charts every single day. The dip gets bought up in these things all the time. What does that tell me? There is a lot of demand for buying these stocks. Honestly, I can see the same thing with IONQ. Like it's ridiculous. Like this stock does not go down dramatically. Yeah, of course it was at $80 and it went down to $60, and then Rigetti, went from $58 down to 42. But it's like, dude, why won't this go down? Like this is ridiculous. This is absurd. The market is kind of a little bit of speculative mode. So if you really want to get your IRENs down to $30, $40, you got to wait for the market to be down. That's the only way. Right? We had that Friday panic when Trump was talking about talking crap about China, and then you got your dip, and that just got eaten up, right? I'm not saying to chase these stocks, but like I'm not going all in these companies, right? Like I was buying NBIS in like the 20s, 30s, and 40s. I was buying IREN in the 21. In the 30s and the low 40s, right? And then I sold it and I bought back in because I was like, that was a stupid mistake that I did. Let me start to build like a real position over here, right? Like a trade was great. But then when I started looking at it, I'm just like, dude, like this doesn't really seem like I want to trade this position anymore. So like, handed IREN isn't as huge as it was when I was trading it, but like it's still a position that I want to build out still. So I'm like slowly edging into that one. And now you have all these data center companies just like ripping after hours, right? So like IREN closed at $58, and then after hours it was like 60 something. I think it's actually at 61 after hours right now. NBIS is freaking up like 2, 3, 4% after hours, right? CIFR, I'd imagine the same thing. And I don't know, guys. Is it going to stop going up? I don't know. Your guess is as good as mine. But I want some exposure to this on top of NBIS. And I'm getting it with IREN. And I would like to buy some CIFR too, but I feel like they're both going to go up, in my opinion. If I could really think about the Bitcoin miners that are transitioning into data centers or making that pivot where the majority of their CapEx and the majority of the revenue is going to eventually come from AI infrastructure, it's those two companies. You guys might know more than I do, but there's so many of them out there. But just to preface, guys, like, look, some of these companies are going to fail, right? So you want to pick the right ones. I don't want to buy all of them because then all of them are going to make it. They're not. Not all of them are going to make it. Some of them are going to fail. Like, I don't know if it's going to be a Bitfarm. I don't know if it's going to be Applied Digital, but I'm not putting my money there because my money would be on the IRENs and the ciphers. So, you guys do your own due diligence. Maybe it's Galaxy or whatever it is. Like, I don't really know too much about those companies, but from what I've seen is that IREN owns the entire stack, top to bottom. They own the land, they own the software, they own the entire stack. That's very unique when it comes to some of these companies, right? They don't co-locate any of their stuff. NBIS co-locates some of their stuff, but they also own the entire stack for some of their data centers. So, there's that aspect. But NBIS already has the deal with Microsoft, and they've been doing it for decades, right? So I'm not going to sell NBIS and buy IREN. Like, hell no, right? But, I want some exposure to IREN, right? When Lambo, I would never buy a Lambo. My favorite car, the best car in the whole world, is a Tesla Model X, and I own it. I've been looking forward to buying this car for years, and I have it. So I achieved that goal. And I'm not trying to show off or anything. Like, dude, I remember seeing these Model X's like 10 years ago, and I'm like, man, I want one so bad, right? Actually, no, the Model X actually came out in like 2016. Yeah, it was about 10 years ago. And I wanted one so bad. And at the time, I was driving a Nissan Altima, right? And I was making mediocre income. And I'm fortunate to have a job that's very high in demand, but I worked hard. And I achieved that goal of getting the best car in the whole world. So you guys can disagree with me. Tesla makes the best cars in the whole world. I am not going back to gas cars. Like, I am not going back to that. Once you go EV, you never go back. All right. It reminds me of a saying that people say, once you go EV, you never go back. I think you guys know exactly what I'm talking about. But anyways, yeah, I mean, going back to what we were talking about, the whole data center stuff, guys, I can't be bearish, right? Right now, full disclosure, I have put spreads in IWM. And ironically, they're actually, IWM is flat overnight. And why? Because my thesis, actually, hold on a second. What is the next segment? Oh, you know what? I'm going to talk about Tranium real quick. So I wanted to touch on this one, and I apologize, guys. I'll get into the real talk later on after this segment. But so let's talk about application-specific integration circuits, or ASICs. All right. Why are ASICs important? So I actually have, let me share this one.
Us now with what is riding on tonight's release, tonight's guidance as well. Mackenzie, welcome. What is maybe the one or two things that you're going to focus on the most tonight from Amazon?
Everyone is looking at their cloud business. So now they still have 30% share of the market, but Microsoft is coming from them. They're 20% market share at this point. And with Amazon, the real question is, what is that year-over-year growth number going to be? Because if they don't get between 18.5% to 19%, that stock is very likely going down. And this is really a reflection of the fact that some of these underdog names in the cloud race, like Google, for example, has been winning workloads away from Amazon, most notably a contract with Anthropic to the tune of tens of billions of dollars signed just last week.
Hold on. Well, hold on. We're going to get more on Alphabet, Google in just a second with Michael Nathanson. Is Google really an underdog? I mean, can we say that in AI?
We can say that in the context of the cloud wars, because they are a distant third in terms of market share, but they're showing, what, an 80% boost in backlog, meaning that their upcoming revenue pipeline is looking really strong. And that's something where Amazon is tepid compared to Microsoft and Oracle.
Let me ask probably a dumb question. And I referenced it in the intro, is Amazon more of a retail company now, or is it more of a technology and cloud and AI company?
Well, its technology and AI cloud business is helping to offset
whatever happens in buying a backpack or paper towels.
E-commerce is not where they're getting their profitability from. It's from their cloud business. But what I will say is that their ad business is a very high margin segment for them, and it is booming right now. And that's directly tied to their consumer business, their e-commerce side of the equation.
I know you have a big piece out on by the way, on Amazon. Go check it out on CBC. Not right now, but go check it out. It's a long look into a new data center they're building in Indiana. Great stuff there. Very quickly back to it, this web services outage. A lot of parts of the tech infrastructure still kind of feeling that impact.
Okay, my bad. I was on mute the whole time. My bad. So what I was saying was that no one asked about the outage with Amazon, which is what this guy mentioned. And I thought it was funny because, hey, why didn't I ask about this? So I'm pretty sure during these calls, when it's an online call, meaning that when the call is publicly available to an audience, they tell people don't ask these questions, or they screen the questions. It's just like, you can't ask this question. They actually have a separate earnings call or a separate Q&A for analysts after the fact, which is probably much more longer, and they go more in detail because they talk about things they can't say in public. And that's probably where they asked about it. But if you ask me, and I mean, you don't even have to ask me, Amazon was up the day that they had that massive outage because everything was down. Even Robinhood was down, right? Robinhood was actually up that day, surprisingly. And why was Amazon up? Because everything was down when they were down. That's how much everyone uses Amazon. How is that not bullish? AWS was a loss of revenue. Okay, guys, so we're talking about hundreds of millions of dollars that they're going to calm people. That's nothing. It's like a $33 billion business. Who cares? 1 quarter, whatever. So, I don't know. Just something to touch up on.
Is anybody talking about how this might be a larger story, or is it just kind of a short-term annoyance around Amazon?
It's an ongoing question. What is going on with their East Coast hub? This is legacy infrastructure that didn't used to serve these AI customers, but those Gen AI clients are asking a lot. These workloads are different to what they are used to servicing. So there is a question of, are they going to bring new compute online? You pointed to that Indiana data center, and they're looking to do this build out. And I will say that's the big thing here that we're going to be looking for is CapEx, because their chief rival in cloud is Microsoft. Their run rate now for CapEx spend is $140 140 billion. Amazon's is at around 100 billion for the fiscal year. We're going to see if they up their commitment to spend more.
Well, I've heard of Gen X. I've heard of Gen Z. I've never heard of Gen AI until right now. That's why I love coming out, because I learn stuff, and we'll check out that big piece on CNBC.com. Mackenzie, thank you very much.
All right, so that was actually before the earnings. The reason why I want to play that is because like this was the expectation coming into it, which is what I called out. Was that if Amazon isn't growing at 18, 19%, the stock is going to be down, right? So if AWS grew at 17%, like the stock would be down, it'd be under $200. But not only did they grow beyond 18, 19%, they grew at 20%, and that was just phenomenal. All right, so going into the ASIC chips, the reason why this is important, the reason why I brought that video up is because, like, look, they're spending a lot of money on CapEx to the tune of $90 billion in year to date so far in CapEx, and then $25 billion for the entire year. So they're going to spend about $35 billion more, and most of it is with AI infrastructure, but it's also with custom silicon. So I mentioned it briefly earlier. You have application-specific circuits, right? But we'll actually go back. You have NVIDIA and AMD GPUs, right? This is general compute. This is to power your ChatGPTs, to power your Claudes and whatever it is. Actually, no, that's Anthropic, which uses. But anyways, this is like general compute, right? To train models, whatever. ASIC chips are designed for specific tasks. Google has TPUs or tensor processing units that powers their Google search and Gemini and a lot of their stuff. It's designed for that. If you were to take a TPU and use it for Amazon stuff, it wouldn't work as well because those are application specific. Amazon is Tranium and has Inferentia, and also has Graviton. I think that's the name of the CPU, custom silicon. That's designed specifically for AWS. And it's actually cheaper for the client because they pass on those cheaper costs to the clients, right? So if you guys use AWS, Graviton is actually cheaper to use than the Intel CPUs or the Xeons or the AMDs, whatever it is. So this is why ASICs are so important, is because they're specific applications, but it's actually cheaper for them to build it because it's all in-house, which is the reason why it's becoming a very important concept. And this is why Marvell is up after ours. This is why Avgo or Broadcom is up after us, because they designed these chips. All right. So, I mean, it wasn't really a lot. That's the reason why I brought that one up. So, final commentary. And then I'm going to go to sleep, guys, because it is 12 a.m. here. Kudos for the 30 people. Holy cow, guys. I can't believe there's 30 people that are on here right now. Again, if you're watching on Twitter, go ahead to my YouTube page. Check it out. Like and subscribe. I put a lot of videos up on there. Appreciate you guys, all 30 people who are going to be watching this, and all other people who are on Twitter, and everyone else who's going to watch it later on. Final commentary. All right. Let's hope I don't say anything I don't want to say because I'm super tired right now. So, let's bring up the market right now. Why not? Why not? All right. Breakneck rally. Breakneck rally. Like, guys, this is just vertical at this point, right? Are we going to get a pullback? Well, I thought we were going to get a pullback here. We did, and it came back up. I thought we were going to get a pullback here. We did, and it came back up. I thought we were going to get a pullback here. It did, and came back up. Like, it's just, I don't know when it's going to happen. It's going to happen. It's going to happen where this doesn't come back up. It's going to go down here. But is that going to happen up here and comes back down here and goes back up? I don't know. I don't know. The point that I'm trying to make is that don't try to guess when it's going to happen in size. Like for me, I put on hedges and I take profits, whatever. I do a little bit of trading and so on. But like my core positions, like they don't change. They don't change. Like I haven't sold my Mercado Libre. I haven't sold Amazon. I haven't sold a lot of stuff. And then I have trades, which, I get in, whether it's 2 or 3 months, whether it's 5 or 6 months, or maybe a year, and then I get out, right? But like my core positions just stay there, like my staples in my portfolio, and I don't sell them. right? I'm not planning on selling Meta anytime soon. In fact, I bought more yesterday when we got that dip, which is pretty egregious. I actually added to my Amazon position in the two teens. I'm not selling those positions. I haven't added to Hood. I haven't added to. Actually, I did add to NBIS recently, and there's positions that I just want to keep in my portfolio long term, and then there's positions that I want to trade. I mean, if we break down, the trades are off the table, right? So I had BMNR, and I sold BMNR around 51 bucks, and hey, it could have went up, but it also could have went down, and it did go down. And my reasoning for selling it was this Bitcoin chart. I look at technicals, right? So, I mean, I have Ethereum, I have Bitcoin, I have some Solana. Like, I'm not going to sell that stuff. Like, that's like stashed away in a wallet, and I don't even pay attention to it, right? So, the trades when it comes to certain things like CleanSpark and BMNR is highly reliant on technicals. No one knows what the fundamentals of a lot of this stuff are. Okay, like I don't care what you say. No one knows where BMNR. Like you can't say that BMNR is going to be $100. Like no one knows that BMNR is going to be $100. If Ethereum goes to 6,000, yeah, it's probably going to be $100. But like no one knows where Ethereum is going to go. BMNR and Ethereum have a positive correlation. When Ethereum moves up, BMNR goes up. When Ethereum goes down, BMNR goes down. Now, the extensuation of that move is probably minimizing. So we'll see the more that they accumulate. But when I bring up the crypto chart and I look at these moving averages, I saw this, got back in BMNR, came back down, stopped myself out a little bit above break even. I saw that Bitcoin rejected this 50-day moving average like strongly, and then coming down and sliced through the 20. I'm like, I'm getting out of BMNR. This is ridiculous. And yeah, we saw what happened to BMNR. In fact, Carisdale Capital, I don't know how these mofos called it, but dude, these guys are up and they're short. I don't know if they took profit, whatever it is, but like I avoided this. Right. And BMNR could have done this and I would have missed it, but I'm cool with that because it was a trade. But I am not going to buy BMNR again until we recover at least a 200-day moving average. What it looks like we're kind of trying to get back above the 200-day moving average on Bitcoin. But I want to see some meaningful recovery in BMNR. So if I don't catch BMNR at $50, that's fine. Maybe I'll buy it at 55 or 60. But I want to see a clean break above all the moving averages for Bitcoin to get bullish again. And that could happen in 24 hours. Who the hell knows? Or that could not happen, and I just won't get into BMNR again. That's fine. Not a big deal. That's a trade. Right. Ethereum, actually, it looks much better than Bitcoin. But Ethereum needs to recover this 20-day moving average. So yeah, I mean, that's the play with BMNR. It is a swing trade. It is not a long-term thesis. I am not going to continue buying this, hoping it's going to go up because no one knows if it's going to go up. And if it does, without me, then that's cool. Like, right? I got my core positions, 80% of my portfolio. Like, I'm fine if I miss out on certain things because like everything else is going to do just fine. If Bitcoin goes up, everything else is going to go up. Like there's no way we're going to be in a bear market and Bitcoin goes up. Like there's just no way. It might happen, but like historically that just does not happen. Bitcoin is a leverage play in risk assets. And right now the market is a little bit iffy. And that's probably the reason why you're seeing Bitcoin just chopping in this zone for right now. So that was Bitcoin. Let's see here. Sam, didn't you say you're going to focus on small caps? Did that change within the past few weeks? Yeah. So, I mean, I was focusing on small and mid caps probably up until a couple weeks ago. And we've had a massive rotation into mega caps and safety in this or value in the stock market. And I've heavily concentrated in buying the dip in Mercado Libre, buying the dip in Amazon. I actually bought the dip at Lemonade, and that's not necessarily that's like a mid cap, but it's been on a crazy run. Lemonade is also a core position of mine, and it's pretty decent size. I don't know where it's going to end up after this, but they got earnings next week, so we'll see what happens with that one. Maybe I'll do a little bit of review during next week's live stream or late night show. But yeah, I mean, honestly, I've reduced the beta in my portfolio by focusing mostly on stocks that I really do like right now, because if we do get a pullback, I don't want to own a lot of small caps that I really don't believe in. I've concentrated a lot of positions that I've opened recently on like lower beta stocks, like stocks that don't make massive 5 to 10% moves on a daily basis. I have added IREN to the portfolio, but like it is not a humongous size at all. Like we're talking like 2.5% portfolio. Like it's not a big deal. NBIS is like 13% of the portfolio, like some egregious size. But the initial size of NBIS was like 3%. I added like 1% cost onto that, but it's multiplied over time. Obviously, it's up like 4 times. So that's why it's gotten so big. I would have never made NBIS a 13% position. And that's just me, right? That's just me. There's nothing wrong with the stock. There's nothing wrong with the company. It's just, that's just me. Am I selling weekly covered calls? So I sell covered calls for part of my position, and I'm actually underwater in part of my hood position as of after hours. But we'll see what's going to happen with that one. Like, holy cow, I did not expect the market to just rip people's faces off after hours. I have 80 Amazon leads expired in February next year. Okay, yeah, actually, this is pretty interesting because when Amazon was in the two teens, actually, let me share my chart here. Let me go back to Amazon. So this is, I'll talk about this trade because I'm no longer in it in size. In fact, I married them. But I got in and out of Amazon leaps expiring in January, the $300 calls, like twice. And I finally got in the third time because this 200-day moving average was insane. All right. And I got in and I got out, like no loss on it. I did it twice. And I got in here, right? Like the day of the day before the outage, I got in because I saw this drop down and I kind of saw it recover a little bit that day on the 200-day moving average is very significant when it comes to stocks, right? I loaded the boat on $300 leaps for January, and man, that thing went up fast, right? So I ended up marrying those to the 310 calls that I sold against it because earnings was coming up and everyone knows about the IV crush that happens after earnings. And I didn't want, I didn't know Amazon was going to be up 13%, but if Amazon was up 4%, these calls would have gotten crushed, right? So obviously it's up 13%. I would be up to, well, actually, we don't know what it's going to be tomorrow. So whatever, but like I basically taken my principal out of it, and it's a free ride. So whatever happens with this, the max gain I can get from the 30-cent spread is $10. And that's if Amazon closes above $310 by the end of January. Who knows if it's going to? This is a free ride, so I don't really care, right? So like that's like the beauty of some of these trades is that like you take out your principal and it's a free ride. It never affected your portfolio. What happens after that? Unless, of course, you factor in the total portfolio amount on a day-to-day basis. But like when you track each trade, which I do on a spreadsheet, this is a free trade for me. And it's amazing. Like I love it when that happens. I've done it with MRVL technology. I've done it with Micron. These things are very enjoyable to do tomorrow. Sorry, it's very enjoyable to do. But hope it holds tomorrow. Dude, honestly, if Amazon doesn't hold tomorrow, like that would suck. Like it's a 13% after hours. If the market opens and it sells off 250 or $300 billion of Amazon at the open, that would suck. I would be pissed. But I don't think that's going to happen unless the market sells off tomorrow. So we'll see. I mean, crypto's holding up pretty nicely. It's above the 200-day moving average. We'll see what happens with that one. We'll see what happens with that one. You know, I'm not going to mess around with it, but like, you know, I want to see the market stay bullish. Like, NQ or the NASDAQ futures is up 1% overnight. Like there's going to be some serious bad news for it to sell off tomorrow, or maybe the market just decides it wants to roll over tomorrow. We'll see. So yeah, very interesting couple weeks. Total whipsaw. I honestly thought Amazon was going to dump after earnings, just like the way that it sold off into the close. And I was scared. I was like, oh man, 16% position. I'm going to be down a lot tomorrow. And boom, it was a great day. It was a great day. What am I going to do with that? My Amazon position? Absolutely nothing. I'm not going to do anything. I'm not going to buy. I'm not going to sell. I'm going to hold it. This is a core position and it's freaking great. Will I trade? I don't know. We'll see. We'll see. All right, guys. That is about it. I am I was supposed to do a 45-minute stream. Here I am, an hour and 10 minutes into it. Hope you guys appreciate it. Hope you guys appreciate my fake plant. It's a fake fig tree. All right. Much like the bricks in Amit's room. Actually, I don't know if those are real or not anymore, but we'll see. But really enjoy you guys tuning in. So go ahead, take care.